Las Vegas condos are crashing, and nobody wants to admit it. Right now, there are over 2,300 condos sitting unsold across the valley, a 60% surge from last year. This is not just a slowdown, this is a full-blown collapse happening in real time. But here's what makes this different from every other market cycle. The condo market in Vegas has always been the first domino to fall. Always. When things went bad in 2008, condos crashed first and crashed hardest. 70% value destruction. Entire buildings went into foreclosure. And right now, those exact same patterns are emerging again. In this video, we're breaking down the 7 forces that are tearing this market apart, building by building, owner by owner. And if you own a condo in Vegas, or you're thinking about buying one, you need to hear every single one of these. There are over 2,300 condos sitting unsold across the valley right now. In March alone, there were 2,240 units available with nearly 4 months of supply. Properties that used to sell in days are now rotting on the market for 2 months, 3 months, some even longer. Imagine you're an investor who bought a unit at Trump Tower in 2021. You paid top dollar thinking you'd flip it in 6 months for a quick $50,000 profit. But now, your unit has been listed for 90 days. You've already dropped the price by $50,000, then another $100,000. And still, no buyers, no showings, nothing. You're hemorrhaging money every single month just to keep the lights on. And this isn't just one trapped investor. When they are finally forced to dump that property at a fire sale price, it resets the comparable sales for the entire building. Everyone else's unit just lost value overnight. That's how contagion spreads. One desperate seller can drag down an entire tower. HOA fees at buildings like Palms Place and Trump Tower are bleeding owners $800 to $1,600 every single month. That's $1,900 to $200 a year on the high end, gone before you even pay your mortgage. And these fees have jumped 20% to 30% in just the last 2 years. For a retiree on a fixed income who bought a condo thinking they'd lock in affordable Vegas living, that $100 to $200 monthly HOA fee isn't just an inconvenience, it's an eviction notice. They can't sell because the market is tanking. They can't rent because vacancy rates are through the roof. And every month that fee comes due, carving another hole in their retirement savings. And here's the truly terrifying part. As owners walk away or default, the remaining owners have to absorb those unpaid fees. The HOA budget doesn't shrink just because half the building stopped paying. So your $1,200 fee becomes $1,500, then $900. It's a death spiral. The more people leave, the worse it gets for the ones who stay. Buildings that were thrown up during the boom are falling apart. The Ogden needs elevator repairs. Boom, $5,000 per unit. Allure needs roof work. Another $8,000. These bills just show up. No vote, no warning. Just pay up or face a lien. Picture a young family who scraped together everything for a down payment on a condo at the Ogden. They're already stretched thin with the mortgage, the HOA fees, and daycare costs. Then one day, a letter arrives. Special assessment $5,000 due in 30 days. They don't have $5,000. They don't have $500. And in Nevada, that lien can lead to foreclosure faster than you think. These aren't one-off events. Buildings like the Martin and the Ogden, converted apartment buildings that became condos during the boom, are hitting owners with massive repair bills, plumbing failures, HVAC systems dying, structural issues. Some owners are just walking away rather than throw good money after bad. And when units go vacant or into foreclosure, it creates a ghost building effect that scares off every potential buyer. Your HOA can literally foreclose on your property for missing just a few months of fees, and their lien takes priority over your mortgage. Think about that. You could owe $400,000 on your mortgage, be completely current on those payments, but miss $2,000 in HOA fees, and they can sell your condo at auction. This isn't hypothetical. Notices of default are up 28% year over year in the valley. Imagine you're a condo owner who lost their job during a tourism slowdown. You're scraping together your mortgage payment every month, protecting your credit, protecting your home. But you fall behind on HOA fees by $3,000. 3 months later, you get a notice. Your HOA is foreclosing. Not the bank, the HOA. And because Nevada law gives them super priority, they can wipe out your equity, sell your unit for pennies, and walk away. You just lost everything. This law is designed to protect HOAs, but it's creating a foreclosure wave. And every foreclosure sale resets the floor price for the entire building. When a $300,000 unit sells at auction for $200,000, every other unit just became worth $200,000. The entire market gets pulled down, one foreclosure at a time. The high-rise market is getting absolutely demolished. In September, only 39 condos sold in all the major strip towers combined. Meanwhile, there are 494 units for sale in those same buildings. At this rate, it would take over a year to clear the current inventory if nobody else listed, but people are listing. They're panic listing because they see what's coming. Think about the investor who bought 3 units at the Signature at MGM in 2020, thinking they'd build a rental empire. The Signature used to be the hot investment property for rental income. Now those units are sitting empty for months. No renters, no buyers. And every month, this investor is carrying 3 mortgages, 3 HOA fees, 3 utility bills, bleeding $3,000 to $4,000 a month in negative cash flow. They can't sell without taking a $150,000 loss. They're trapped. And it's not just the Signature. Trump Tower is seeing price cuts of $50,000 and $100,000, and still no buyers. Even Palms Place, which allows short-term rentals, cannot move inventory. In July, they sold just 4 units. When the most desirable buildings on the Strip can't sell, that tells you one thing. The buyers have vanished. The rental market that was supposed to save these investors is collapsing too. Vacancy rates have shot up to nearly 10% valley-wide, almost double what it was in 2022. Average rents for condos have been sliding for 6 months straight. In areas near the Strip, vacancy rates are hitting 7.6%. These investors are competing against 12,000 new apartment units that came online in the last 2 years. All those people who bought condos to rent on Airbnb to traveling nurses or to convention goers are sitting on empty units, bleeding cash every month. Picture a couple who bought 2 units thinking they'd generate $3,000 a month in passive income. Now both units are vacant. They're offering 2 months free rent, paying broker fees, doing anything to get bodies in these units. And still, nothing. The market is oversaturated. There are no renters left. The tourism softness is real. Visitor counts are down year over year. Conventions are not filling hotels like they used to. And if tourism keeps declining, those rental vacancy rates will keep climbing. Every vacant unit is another owner on the edge of default. And when the defaults start accelerating, the foreclosure wave will be unstoppable. The California exodus that fueled this market is over. Those tech workers and remote employees who flooded Vegas in 2020 and 2021 are not coming anymore. Their stock options are underwater, their own home values are dropping, they're stuck. And without California buyers, the Vegas condo market has no floor. 2 years ago, buyers were bidding over asking price, waiving inspections, buying sight unseen. Now sellers are cutting prices every 2 weeks and still getting no offers. Open houses are empty. Realtors are calling, begging for any offer, any interest at all. The psychology has completely flipped. The fear is palpable. And here's what nobody is talking about. The smart money is already out. Institutional investors who bought hundreds of units in 2020 and 2021, companies like Blackstone and Colony Capital, are quietly dumping inventory. They're not advertising it. They're not making a big deal about it. But check the records. These big players are reducing their Vegas condo exposure. They know what's coming, and when the institutional money runs, the retail investors are left holding the bag. So here's the bottom line. The Las Vegas condo market is not just struggling, it's collapsing. The inventory explosion, the HOA fee death spiral, the special assessment hammer, Nevada's foreclosure law trap, the high-rise apocalypse, the rental market bloodbath, the buyer exodus. It's all happening at once. And if history is any guide, this gets much worse before it gets better. Condo values in Vegas fell over 70% in the last crash. Entire buildings went into receivership. Homeowners associations went bankrupt. Owners just mailed in their keys and walked away. So what does this mean for you? If you own a Vegas condo, you need to run the math today. Calculate your true monthly burn rate, mortgage, HOA fees, vacancy costs, potential special assessments. If you're bleeding more than $1,000 a month with no end in sight, you need to make a decision now, before the panic selling starts and prices drop another 20%, 30%, 40%. And if you're thinking about buying a Vegas condo, the one document you must demand before making an offer is the HOA reserve study. That document will tell you if a special assessment is coming. It will show you if the building is falling apart. It's the only way to avoid walking into a financial trap. But here's the real question nobody is asking. If the Las Vegas condo market is imploding and the warning signs were ignored for 2 years, where else is this happening? The same forces crushing Vegas condos right now, over-leveraged investors, soaring HOA fees, special assessments, buyer exodus, are quietly gathering in 3 other cities across the Southwest. In our next video, we expose the 3 cities showing the exact same warning signs Vegas ignored. And if you're invested in any of these markets, you need to see this before it's too late.